we'll do a video of the last couple of sessions, just kind of do what I was looking at and whatnot. I've already cut it to Wednesday, so if we just move it to around 2:30 real quick. 2:30 now. Okay, we'll just look from here. What I was anticipating and doing on Wednesday, because I remember what I was looking at, the trades I took and everything. So we can just do a little run through of what I was looking at and the trades I took as well. So I was using this daily. This is the daily order block. The levels inside of it. I thought price was going to come up on this day before it has a little bit of a retracement down, which is exactly what happened. So around 2:30, we already came to here. I thought we could get to this level, as this is obviously the PDR for that. So that's what I was anticipating. If we just run it forward, we'll see that didn't happen. We did actually come back down before going higher. And the moment I saw we had a sweep at the bottom of these lows, you can even say you went as low as here. You swept all those lows here. Didn't actually break it. So in this moment, if I thought it was going to go higher, there was no reason for this range here to do anything more than flip direction, potentially just back down to here. So once we got back down to here and we failed to hold this range and failing the high here, this is the first thing to look at. You failed a high, the very exterior high here gets failed while trying to break back up. That's the first sign of failure. So when I saw this, I already looked back here and went, I don't think this is going to take us higher anymore. So I was looking for a bit of a retracement further down, and if we're looking at the PDR of this, then it would be, I'm pretty sure this is the same level as the 1%, or sorry, the 100. If I just get that on the screen. Visibility, style. Yes, so it's the same level. So I already anticipate it coming back down to here now. So if we just continue. The first sign already is closing here. And then we just go straight down. Shallowly miss it. I think we get a bit of a retracement up here. We do. It's so close to being tested, you can just say it's tested regardless. I think that's what I was saying on the day. And then you're just looking at the PDR of the PDR to see what's happening on a lower time frame. You can't really see the 15-second. But that's something I was looking at, and just seeing, are we holding above here? If we are, we can potentially get back up to here. Maybe start the cycle up. Let me go forward. I'm pretty sure we do sweep these. I do have a trade coming up sometime soon. So yeah, we sweep these, and the moment you tap into here, this right here was my trade. So you tap into here, right? This is a different scenario where it's not you going. It's not a different scenario. You guys normally look at this as to go higher for some unknown reason. As I was looking at this as, okay, we swept these highs. What's equivalent to those highs would be these lows. Okay, so my target is these lows now. I saw us come up to the order block of the range that broke down. This was always target after this was closed. So once we came up to here, I took that opportunity. I think it was also a swing. It was not actually. Regardless, that didn't really matter for me. So we took them. I remember taking the midpoint. The moment it closes on a 15-second candle, I take this, or I might have got in it beforehand, and then I targeted down here. I did actually get trailed out earlier. I'll show you where. Go forward. I remember trailing candle to candle, and once we get this massive candle, there was like a 15-second big candle here. So I just trailed to, came up, stopped me out, went a bit higher before I continued down to that initial target. And it's just a typical A to B setup, really. You close down here. You already think it's going to come down to here, regardless if you thought this tested or not. You close here, it's going to come up to here regardless. If it doesn't go to there, it would come to here. It will still be the same setup to go lower. Even if you think it's going to go higher than that, you can always just take the retracement from this order block down to this order block to then try and break higher. So there's nothing wrong with taking a trade in the opposing direction that you think it's going to go in long term. It's if it's okay to do that in the moment, then I would always urge you to do that. You don't have to, just because you're long doesn't mean you can only take longs in the day. Or if you're short, you can only take shorts. You just take whatever's there. And this is what was here. Like I said, I think it's going to go up on this day, but I took a short because it's a completely valid short. You've got the whole setup. You've got the degradation here of all these lows have been closed. This was just the next part it had to go to before it continues in that direction. So you take that. I'm sorry, I took that. You had a little bit of a retracement up. You can also say as well, right, what created this move up here, or you could even say here, really. Okay, so if these have been closed, why can't you get a re-entry when it comes up to this gap or the order block? Let's put that on the screen. I'd like to have a black outline now. Just looks cleaner. Okay. So that's something I was looking at in the moment. If we came up to here, I would have liked to get a re-entry. But the thing is, this makes more sense over coming up to here, because this is the low. This is the more aggressive part to be held down to get that aggressive move down. Because if you come up to here, it's kind of, you know, it's going to be that slow movement. With slow movement, sometimes it just breaks in the opposing direction. Whereas this, holding here and aggressively going down, is kind of what you want to see. It wasn't something I was anticipating in the moment, though. Looking back in hindsight, though, it's something that makes a lot more sense holding a poster up here. Regardless which one happens, I would have definitely still taken this if it came up. So we got to the target now. We swept down here. Not really seeing a reason why it would go up, because you got to think all of these lows have been swept. There's a lot more here than there is here. These are further in the past, and there's a lot more lows, and it didn't flip direction up. So why the hell are these two lows here going to flip the direction? And in the moment you can see nothing really creating, so you can only really anticipate it to go lower. And if that's the fact, this is the higher the fair value gap, this is the PDR, so our target would be there. We can always look at what's happening in between that, if we get that level on the screen. Always do a dotted line for the cycled PDR. Let's get the regular line back. Okay, so our new target's down there now. So we can start looking for reasons to try and short that. So far, until now, there wasn't anything, but now we've closed this. We can see if this first range holds, if the direction is going to continue down. are we going to get a sweep of these highs? We break the low. Maybe we come up to here before we go lower. We break into exterior on this side, break into exterior on this side to then continue down. Okay. Some new lows here. And by the way, I'm pretty sure I was done already on the day. I think that was all I took. Because I don't really remember too much of this anymore. I think I just got that trade and just left it. Right, so as I said, I don't know why I got rid of that. Okay, so we've got the sweep here. We've got an ATT coming up. This candle is an ATT. Okay, so first thing I'll be looking at here is we didn't get to this level. I still think we're going to go down. We're not really getting any higher than this low, which is obviously the further back low in this leg up. We're failing to get above this fair value gap, which created this wick, which created this whole range. So if we're failing this fair value gap, and we're failing the midpoint of it, and there's also a swing, the midpoint of this wick also never went, and then there's really no reason why this will continue up right now. So with that sweep and that whole process I've just said, I think looking for a short down to this low is completely valid at this point. With the swing put in place, you could always go for something a bit less aggressive, wait for the midpoint of this wick to go, maybe enter in it, or just go for the midpoint of the order block is something I would look at. It's always going to be the best option to go for the midpoint of an order block, because the thing is, you break even as fast as you can. Yeah, you might miss out on a lot of trades, but you also miss out on a lot of losses. There's that movement down. Who knows if you would have got filled in that candle? We won't know unless it tests back up. Easy profits or easy trailing already. Could have trailed candle to candle. You know, with a take profit at this low. Because like I said, we think it's going to come to here right before it flips back up. Okay, well, you would have got take profit there. 3.70, not too bad. Now we've got here, we've closed the lows. What can we anticipate? I'd be personally looking at a retracement back up before we continue to cycle down to the true target from here, because this is just a PDR, right? I kind of see the cycled PDRs as just a flip in direction momentarily to get to the more exterior target, which in this case is the exterior target from here. Continue. So we think it might come up to here. We can put this on the screen. Never tested this. Personally for me, no reason to get into anything here. It didn't hit where I wanted it to hit. This is the sign that we can still get up there, and I would not be concerned about this high closing and now flip and say, okay, this won't hold anymore. This is good. This is showing that it's still trying to climb up to that before we go lower. Because like I said, we got here, we didn't get to the actual target yet. We closed these. It needs to come up to here before it goes lower. So closing some really shitty interior high doesn't mean the direction is now just changed up. I'm seeing this as, if anything, you could see that as a long up to your position, which is something you could definitely go for. Go for like the midpoint of the wick, the midpoint of the order block, the anticipation of this order block. Now we got there. So now what I would have done in this moment here, don't care that we closed this high as a range. I'm not seeing this. I'm not looking at this and thinking it's going to hold. We got to our target. I'd have looked at the midpoint of the order block again. Went for this to play it down, not to here. You can take it to there if you want, but the whole concept of this whole move is to cycle down to the next level, which is here, which is exactly what I'd go for. If it doesn't get there, I'd probably get trailed out somewhere. Also, if I missed this, I would still try to go for the midpoint of this here. And I would have been trailed out already, regardless, for 2.56. Does this mean I wouldn't look for a re-entry? No, I think a re-entry here is still valid. What do we think the other direction's doing? We always think it's just retracing or changing the direction momentarily to continue in your direction. So that's how you need to look at the other direction. If you're looking for, if you think it's shorting, look at the long positions as just flipping direction momentarily up to where you want it to go before it continues. And because we close these lows, and the high equivalent to this low is here anyway, if that is a high, that's already been swept. So now I'm not looking at, oh, this is the new high, because this high is equivalent to this low, whereas this low is equivalent to this high. That's already gone. It's not now going to flip up and go all the way up. I'm looking at this as the new position. This is the new position here. What we can do is move this box to the fair value gap, inversion fair value gap, and never closed. New position, right? So this is now your next entry. Anything? Yeah. I'd be a bit cautious right now. Nothing's saying it can't just go down. Just because the swing looks like it can be low. Something I would do if I'm a bit cautious of swings, I'll go back and see if the other swings have been trending. This one, there's no real swing. It's the same level. The exact same level. Is 53 a swing? 53 was barely a swing. Let's be honest, it didn't really change anything here. 47. 47 also wasn't a swing. Yeah, you can say it was 45. In my opinion, it doesn't really look like it's been trending since here. So if I was already up on the day, I'd disregard that whole ATT idea, and there would be nothing wrong with going for something like this then. I already think it's going to go down. We swept here. ATTs have not been trending. Direction is down. Everything looks good to now go target this. I would take that. So clearly would have been filled here. Do you close the midpoint? You close the midpoint, so everything's already going in our favor to continue down. First target would be here. If you'd want to get at first target. I'm always just going for the biggest thing. Anywhere I would have been tried out yet? No, not really. Tried to this high, tried here. Maybe it's a 15-second candle you could try to in that. Now I tried to here. So regardless, 2.41. Trying to play it for the bigger move down. 10. This might be a swing. Yeah, they've not been trending, but this might be a swing to take the price up. So I'd be looking at that cautiously. In my opinion, this is going to be a swing. Close the next set of lows. We closed the low for this order block. We can now come back up to this order block before we continue down. just continuing the cycle of order blocks and lows and highs. So I'd definitely try this very aggressively at this point. If I wasn't already tried out here, I'd be here. Taking into account there's a fair value gap that could hold to continue it down. Doesn't, so I would have been trailed out there for 3.29. And now guess what? I'm looking for the exact same setup, the exact same trade as the last two trades and the actual trade I took. It's just the same thing over and over and over again. It's not complex. It's really not. It's just the same pattern every single day, countless times. It's just the balls to take them. Look and see if it comes up to here. It never does, so we would have missed this opportunity. Also missed the inversion fair value gap, which is the first thing you'd always look at in a leg. It's always going to be the oldest thing in it. That never got tested into. If that doesn't get tested into, we have the range that's happening right now. If you still think it's going to go down regardless of testing up to there, you could have looked for something inside of this after the move up to take it down. If not, you're waiting for the low to close. Low's closed. So once we get a retracement up, we've still not hit target. And this low, high's already been swept. So why is this now going to flip the direction? Always keep that in mind. The low gets placed, then the high. High's already gone. This low isn't really going to do much. Now we're at our position. So we have the fair value gap and the order block getting tested at the same time, which is nice. Order blocks here. So if it did get under this on the 15-second time frame, we'd be in. If not, we're waiting. Clearly in at this point. Okay, any reason to break even yet? In my opinion, yes. We've come down to the order block, we're holding this inversion fair value gap. We could definitely spike up. So if this was my position, I'd be break even. Okay, so I would have been stopped over there. Does this mean it won't go down? No. So what I'd look at is, okay, this hasn't been touched, right? This hasn't been touched. This is the high for that low. This is where my stop loss would have been. So you would have been spiked out for -1R. Now we're kind of re-engineering our idea and going, okay, spiked here, low hasn't been touched yet. If we've spiked here and it's not close to high, why the hell is this order block going to hold? So what we can do is we can look at the midpoint or the open, look for a new entry to now take that down to our target, because like I said, we've swept the high for this low. And we go exactly there. Not yet. Where would I be trailed? Would have probably already been trailed out personally. Somewhere on the 15-second would have been trailed. If I wasn't trailed, I would have been trailed here and also taken out. So it was either going to be about 2.57 or around 4. Still think it's going to go down to that target before it then flips back up to potentially here. Okay, so now we've got there. My direction's already changed, and I'd already been along. Yeah, I played that a bit too fast. I didn't really get to give you a reason why I'd already been along. ATT 47, big wick, holding, order block created, holding off of the 47 swing, midpoint of the order block. Once it's gained in here, already break even with that massive push up, targeting up here, exterior target for 8R. I'd advise you to be here. I'm just here because obviously I make money. So put it there. That's where that's where you should have it. It's here. So we'll put it there. So direction's flipped. We already thought. The moment we got here, we already knew it's going to come down to here. This is the first point that's going to flip that direction, right? Remember, the cycled PDR is always what's going to be flipping that direction momentarily. If you're planning for the long move, as in you want to get all the way up to here, you would trail so slowly. I don't trade like that, so regardless, I still wouldn't be trailed out here. I'd be waiting for this. Maybe because we closed here, this is the order block that can hold. If this holds, then I can trail to the next range, which it has done. So now I'd be trailed to here, 1.49. Sorry, for me it would be 3.56. Immediate rebalance here. Could trail there, but the thing is, because we're looking at these, actually sorry, we have actually got to this high. We've got to the high of this whole little range here. So if that's the fact, got to that high, and we got to that inversion fair value gap that we never tested into, trail aggressively. So I'd be here. Do I think this is going to flip the direction down? No. I think if anything will come down to here before we go higher. Okay, so I would have been trailed out there for 3.75. You would have been trailed out for 2.09. So now we flip the direction down to the order block, exactly where I thought it would go. I'll probably just make this into 3 videos because of how long it takes me just to go through a couple of hours of data. Direction been flipped. Like I said, when we just get here, I think direction will flip. It's flipped. We've got to our target to then proceed up to the exterior target. Swing coming in. You did gain that. This is the first thing I would have tried. I would have been stopped that break even already. I'll run you through why. Okay. That's kind of a big stop loss for me, so I'll be here. Once we gained it, moved up. Already moved up 1.75 all right. Big ass candle. I'd have been break even. Do I still think it's gonna go up? Yes. So I can look for a re-entry. Anything? Yeah. If anything, just kind of just looks like it might be failing until okay. Still looking promising. I'd look at the midpoint of this fair value gap has also been closed. ATT in a minute. Have they been trending? 2 minutes late. I'd consider that if the last ones have been trending. This has been trending. This trended 53, but it was at 54. Yeah, so they've been trending. So maybe we'll get a swing lower. This will key me into a long, which it did. So trying the midpoint of this candle here, which is just the open, with stop loss here. I would have my stop loss here as well. You could have it there. Oh, sorry, I could have it there, but I'd rather try and give this as much as you can. So this is always where I was going to come to. I had to flip it. We closed the highs here, so this order block is valid. Troud can come down to here now. This could momentarily flip direction down to where we entered, because this is the now valid order block after closing the high. So we could always flip down to there, or we can just flip down to the first little range here. You got high and a low. No reason why it's come all the way down, right? So if that was the fact, we would wait before trailing. I'd already be trailed out, but what you should do is just wait, unless you want a re-entry, as in get trailed out. Okay, you think this is going to hold, comes down, tests it, and then we look at the midpoint of this, anticipating this is now the next order block. And then once it gains, you get in, and it goes again. So get trailed out, get that re-entry. Even if that one loses, you would have still got more profits than if you was trailed down here and got stopped out. And yeah, you can set that one to target. So from there, right, it's simple. It's the most simple thing ever, right? You might not see it as that right now, but it will be. So let me just put a line here so I know where to come back to. Look at this, right? The moment we close here and we can't get back above it, already straight away first target is there. The real target's here. Here it might flip before it goes down to there. Once this gets tested, same thing again, going upwards. Okay, so then we'll get here, maybe we'll get back to that PDR before we get to the next cycled PDR, to then get down to 0.5. So it's just a simple pattern every single time. Forget about the cycled PDRs real quick to make it a bit more easier to understand. Is you get here, you fail to get above it, okay, you're going to come to here. Once you get here, you need somewhere to flip it. It's going to flip back up before it flips back down. So once we get here again, it's going to hold off a something before it goes lower. Okay, where's it going to go? Get to 50, and then up again, then down, and it's going to continue that until you get out of it. So it's just a cycle of levels. It's a real just A to B, back to A, to C, to B, past C, down to D, back up to C, down to E, C again, then out. Oh, D, sorry, then out. That's literally all it is. It's simple, it's just letting yourself do it and not double guessing everything. I will do one more example here and record this on a video. It's already 34 minutes in. Okay, so now I'll be playing this for the move down. We got to A after getting to B. Now I think it's getting to C. Let's get our cycled PDR in here. I'll just leave it as red because I can't be bothered to change the whole line back to black. Okay, there's our cycled PDR, which it will get to before it gets to 0.5. Don't need this on the screen. Sorry, I don't know why I played that. It spoiled it. Regardless, I would already been looking for a short anyway. Got to our target, right? Target's been here. That inversion for Valley Gap and still just never got broken above. Can wait for the midpoint of this. If you're waiting for a bit more, go for the bearish order block. We're playing that and we think it's going to go down. First target could be this order block. If it flips back up momentarily, it will flip off of either the high or this first order block. So that could be your first target, but we're anticipating it can get all the way down to the first order block of the range, which would be here, and lower as well. Cool. And this is just literally just the same trade as what I took earlier, really. Same, just black candle down, whereas this has a lot more behind it. This is a 10 times better setup than this. This is a lot more cleaner. You finally get to where you want to go, and this is going to plummet the other direction. So we get to that 0.25 again. Going to get a little bit of a move up before we can get down to our target. Comes down to our target here. Anywhere you can get a re-entry or go for, if something shows us, we can go for this bearish order block, maybe the midpoint of it, or whatever creates off of it, or maybe we sweep here, see what happens at this low. So once this high gets put in, this is the target when there's a high. 51. Sorry, I'm just trying to move. Once that high gets put in, we sweep, right? This gets swept, never closes. We have the midpoint here, first entry. If you miss that, you have the order book open. And we already know where our target is. We're targeting here. Never gets there. You would have been stopped out somewhere down here. Personally, I would have been stopped out. Probably knowing me, I tried somewhere aggressive after this. Got stopped out here for about 0.76, but I would have been here anyway. So 2.43. Still think we can get down to here. No reason why a cycled PDR is going to flip the whole direction. So why do we think it's going to come all the way up to here and higher? There's nothing saying it can't come to here because we close these lows, but it's not going to go any higher than that. So we'd still be looking for shorts until something long screams out to us. Whereas you can start to see that, right? Closing the highs, closing the highs. So you could look at this and go, this might not hold, we never closed a low, whereas the interior low for this high did get closed, so this can still flip direction down. So that's something you can look at. Did it? It did flip the direction. Now we've closed these lows. If this doesn't hold the price up, then we can get to our target, being the 0.25 all the way down to here. But like I said, we can still come to here to get here. But if we go all the way back to the start of the video, we think at some point it will go up. So we are, yeah, we're taking shorts, but we're still hoping that we can start cycling up to get up. And once we do start seeing that, and then we can take our longs. Anything here? Well, this is clearly holding. It's refusing to go lower ever since it got here. Didn't close, didn't close, didn't close, closed, closed. This holds, or something around here holds. The first fair value gap is here. Look back, anything of importance? Not too much else. Obviously you have the actual high of the this order block. But something I would key my eyes into is if we don't get to here, well, the actual order block of the range is here, so if that holds, then maybe we can get something off of it. Never got tested, so you see that aggressive movement up, which happens when you actually hold off a high, which has happened now. Could not get any entry at all. So we've now got to where it can get to before it potentially gets to our target, which is here. This does look like the cycle of trying to now break all the way up. If this doesn't hold price down to here and lower, if it holds it here and this holds, then we're kind of clear to go up, in my opinion. So in this moment in this moment still, I'm still looking for shorts, because there's no big reason why it's going to still go all the way up. We got to our last point before it can go to our target, so looking for shorts, already being one personally. And we're trying to take that down to the order block of this whole entire range. We can always go on a higher time frame to find where the bigger one is. Okay, the 5 minute, this is the order block. Go on the 1 minute, so just this range. This range down here is where we're looking for. And we do get to this range before we continue up. So there you go. This is, you're holding the range down. You're holding the range down, right? This is what you didn't want to see hold if we think it's going to go lower. So the moment this holds, complete reject the target of here. Just forget about it. Go, okay, we're holding now, direction flipped. And that's when you flip direction. When the last thing that could validate the move down fails. By failing, I mean we wanted to see these lows go, actually break below them. It didn't happen. So if we failed and we're holding the next set of order blocks to continue to price up, then direction is clearly flipped. So we're already disregarding this holding now, or whatever, anything up here holding. We're then looking for longs now. So the moment you get this, closes, with a little sweep here, closed here, order block of the range is here at, holding. If we're looking at this as a bait range, the moment this closes, why is this not valid? This is so valid. Take that, the midpoint of what tested into it. So once we're in here, we're looking at this as target and even higher, which is exactly what it does, and direction's clearly flipped at this point. So now we can go back to our first idea and say, now we can continue that price movement up that we thought was going to happen at the start of the day. But yeah, I'll end it there, and I'm probably making another one for the next session.